I follow hundreds of companies ranging from technology stocks to healthcare stocks to industrial companies. And out of all of those companies I'm following, the best stock to buy right now, in my opinion, is Uber. And I'm going to share with you why I think that's the case in this video here. I've had Uber stock rated as the best stock to buy all year long in 2025. I first made this recommendation around December 31st, 2024, January 1st, 2025, and I've kept Uber rated as the best stock to buy all year, even though the stock is already up almost 40% in 2025. So it's worked really well so far, and I think there's more runway to go for this very interesting growth stocks. And I'm going to share with you the details. Let's begin.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so one of the reasons why I'm recommending Uber as the best stock to buy is because of the company's excellent customer value proposition. And one way I view the customer value proposition is by looking at a company's revenue because it measures how much customers are willing to pay in aggregate for a company's services. Uber has grown its revenue from 3.8 billion in 2016 all the way up to 45.4 billion in the most recent trailing 12-month period. That's a more than 10x increase and good for a compounded annual growth rate of 35%. What's more, the total addressable market opportunity is massive. The company can continue growing for decades without reaching a ceiling. The cost of car ownership has soared in this time period that Uber has increased its revenue share. People are increasingly finding it more affordable and more convenient to take ride sharing in combination with other transportation services instead of car ownership. Earlier this year, I shared with you a video discussing that fewer and fewer people in the United States are applying for driver's licenses. They don't even want a driver's license anymore because it's too much of a hassle. It's too much of a cost to have a car in terms of owning it. You've got to think about the monthly car payment, which is soaring. The average monthly car payment in the United States has soared above $600-700 a month, while the total payback period has increased from 5 years all the way closer to 7 years. Additionally, you've got rising cost of oil to fill up your gas tank. You've got rising insurance costs, rising cost of parking, rising costs of registration, etc. I could go on and on and on. The cost of car ownership has exploded. And with that increase in the cost of car ownership, has consumers looking to other options for transportation. Uber has filled that gap very nicely, and it's even becoming more attractive as time goes on. I don't see this changing or reversing anytime soon. The industry structure for the automotive industry makes it unattractive for car companies to produce lower priced models. And so they keep focusing on higher priced models, which just increase the cost of car ownership. On top of that, tariffs will make it more expensive for these car companies to produce and sell vehicles, which makes taking Uber along with other transportation services, again, as a more attractive option for longer term, especially if you don't have a family. This is especially convenient if you don't have a family. All right. Another reason why I like Uber is because of the asset light business model. The return on investor capital, which is one way I measure the unit economics of a business. And of course, the unit economics of a business is one of the 6 things I look at when I'm evaluating a stock. I wrote a whole chapter on that in my book, The 6-Step Framework for Evaluating Publicly Traded Companies, Making Money, Buying and Selling Stocks. Uber has an excellent business model. 21% ROIC in the most recent period. That's up from negative 50% in 2019. A couple of ways Uber gets to generate great ROIC. Number one, none of the cars on the Uber platform are owned by Uber. Those are all brought to the company by drivers and various third party that rent to the drivers. So it's the drivers that are bringing the assets to Uber. Uber gets to utilize those assets and generate profits from those assets. Unfortunately, I don't think many Uber drivers understand the depreciation expense that they are experiencing as a result of bringing their own car to the Uber platform. They're mostly calculating the wages they earn daily and weekly without accurately considering the wear and tear, the damage they're placing on their vehicle, and the asset depreciation that they're experiencing in the vehicles they're bringing to the Uber platform. Still, I think working for Uber is an attractive option for many people because they get to work as many or as little as they want to, as many or as little hours as they want to. Nobody is telling them when or where to work. And so it's more attractive than working at some other company with similar wages where you have to show up a certain time, certain days per week. You have to ask permission to take a day off. You have to ask permission to take a vacation. Uber is more attractive, and so drivers are willing to bring forth their assets. Additionally, Uber operates on that uh, platform business model. They just bring together those that are requesting services like food delivery and rides, and those that are providing the services. And these people are not official employees of Uber. And so, if there should be a decline in revenue, they also experience a decline in cost. As I noticed during the pandemic, when Uber's rideshare business collapsed, so did its cost. And so that allows the company to operate more efficiently and with less risk because its costs are connected to its revenue. Should revenue decline, its costs decline. I love that business model. Uber operates it very efficiently. And you can also see that in the company's operating cash flow to sales ratio, which has soared in recent years to 17.7%, up from negative 80% in 2016. And the company is forecasting continued improvement in this metric as demand from consumers continues to expand. And the business model has already been uh, built with a strong foundation. And so these incremental revenues allow the company to expand on its fixed cost, and newer, more lucrative services like advertising are driving even better cash flow to sales ratios for Uber. And of course, I think the valuation is relatively cheap. Uber's trading at a forward PE of 29.35. And let me mention, I'm getting all of these charts from finchat.io. There's a link in the description for a discount. They have these kinds of charts and additional services that makes investors' time for research a lot lower and also could improve your performance because you have a lot more data to access. Now, I looked at this valuation on a forward price to earnings basis, and that looks cheap, but I also calculated a discounted cash flow model. And according to my proprietary discounted cash flow calculation, Uber shares are worth $109, and they're currently selling for $83.64. So you can buy Uber stock at a relatively cheap valuation. And one of the reasons, of course, is the biggest risk factor, in my opinion, is driverless car technology. I've argued that driverless car technology could be a benefit for Uber. And in the early stages, it has been a benefit for Uber as it's partnered with companies like Alphabet's Waymo to increase and expand on the services it offers. Longer term, though, it could be a risk as companies like Tesla try to develop their own driverless car technology and connect with consumers by excluding Uber and stealing market share from Uber. That's the biggest risk. However, I do think that risk is overestimated, and I think Uber's prospects longer term will remain solid even if driverless car technology gains momentum and becomes more broadly adapted by consumers. So, for all these reasons, I think Uber is the best stock to buy right now. And by the way, I do own Uber stock myself. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.